The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And welcome all to another wonderful edition of the Power Trading Hour inside the headquarters of Technical Trading and Investing, TFNN.com. Of course, we had a great webinar. Glad everybody could make it last night. If you couldn't make it, you still want to look at the Art of Timing the Trade charts, go to your members page, and it will be there for you to see. And if you're not a member, you should sign up and get all the perks of being a member here at TFNN.com. We're up 1 2 points on the S&P cash. We went down to 1601 and bounced. Looks to me like they are wanting to hold this market up for a few days. What do we have going on right now? This is the 28th. This is basically, you've got yesterday, today as fund buying, and then we'll have Monday and Tuesday setting up the end of that fund buying. So going into Wednesday, Thursday next week, looks like we could have a rather flat market to maybe just a little higher before this thing crests and falls off a cliff. At least that's my call. But, we just have 2 billion shares so far, about 2.1 as we start the show. This is not a rousing endorsement after huge volumes down. And, of course, not a whole lot of movement up. I think the best thing that I could see is that they turned the jets off as soon as this thing got up about 1610, which makes me think that this is a little bit of a manipulation to make sure that we hold this market up during fund buying. Of course, that'll be Monday and Tuesday. So I don't think the long-term trend has changed. I do think we have a little organic reason to hold this market sideways for the next few days, and actually going into the 4th of July holiday next Thursday, isn't it? Yep, next Thursday. So it'll be a quiet week next week, at least for the most part. But we'll continue to see how some of these stocks continue to do. We're going to probably see a very quiet next few days. And I think that's going to be a lot what the doctor ordered from the perspective of the Fed. They don't want a lot of action going on out here. They want this pullback to be nice and sweet and slow as they let the air out of the bag. The question is whether or not did Ben Bernanke lie to us? Is there going to be any throttling come the fall? If you believe some of the people at the Fed, the answer is no. He just flat out lied. Was just causing some wind out there with his jaw. If that was true, I can't see any reason why he would not be reelected the Fed governor, and that he was so unceremoniously evicted from consideration of being in office next year. I suspect that he really truly thought that he was going to at least pull back some of the QE. But a lot of Fed governors out here running their mouths the last couple of days saying, he was just kidding. Oh, no, we can't have the stock market pull back a penny or an inch. Unfortunately, all the volume on this on this pop has been extremely weak. No more so than yesterday. And we're seeing a lot of very highly short stocks move on extremely light volume. And they're going to try to hold this market up. We'll see how this thing closes. But my guess is that we go sideways probably for the next couple of days going in to the 4th of July. Almost nothing as bearish is a very light volume and a slight upward trend into a 3-day weekend. Of course, we're not going to get that here for the 4th of July, just Thursday being closed. But a shortened week, just the same. And, of course, most of these things where people get together, especially 3-day weekends, tend to see a very different character in the market. So I'm going to be very interested to see what happens after the 4th of July. Again, 2.1 billion shares, not a big day in what we've seen in the past. We do have some stocks that are moving fairly quickly. And in the I told you so segment here, we want to look first at BBRY, RIM, BlackBerry, whatever they're calling themselves these days. We're going to look at that real quick. You know, I guess you could say it had a small Gartley. This thing is auguring into the center of the or the center of the Earth. The China syndrome on Research in Motion. About 4 or 5 weeks ago, this thing was trading around 15.5, 16, and our CNBC watchful bull out there was Kramer was saying, this thing is going to the moon. They're going to ship this new product. It's got keys on it. Everybody wants to, at least the people that used to have BlackBerries, want key. Everybody's going to want it. It's going to have it. We're going to have great earnings. All the analysts are saying it's going higher. And I said, bovine excrement. Yes, I did. I didn't say it quite that way. I'm not allowed to actually say what I actually felt. I kind of have a theory that a lot of times you can say, yeah, maybe the opinion goes one way or the other. Sometimes you just have to either say someone's a fool or a liar. And in this case, I said, Kramer, lie, 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 liar. Ain't going to happen. Research in Motion, there's absolutely nothing, and he was actually doing it this morning again. They're going to continue to try to push out shares to the unsuspecting public on this. Of course, it's massively shorted, and it's going to be. These stocks I've referred to as the living dead. That is, that they're going to keep them up, they're going to cut costs, they're going to fire people, they're going to do different things, they're going to do whatever it takes, because the people that own huge tons of this have to push it off before the thing goes to zero. And I gave it 2 years, so what do we have now? I've got 1 year and 10 months left on my projection before this thing goes belly up. We also looked into the other lies that are being told about Research in Motion, and that is, well, they're going to sell this, they're going to sell that. The latest lie is they've got a list of subscribers, and that list has got to be worth a lot. You know, they've got all these people. Well, of course, the lie 6 months ago or a year ago was they've got all these patents that are worth just what Motorola was. They'll pay $8 billion just for Motorola. Of course, that never happened, and it's not going to happen. They've already sold the rights to all those. The only way that anybody's going to have a chance to buy those rights if this thing goes bankrupt and the rights reverse to the bankrupt company, in which case equity holders still are going to have nothing. So if you were thinking about making a dime on Research in Motion, and of course Kramer was out there saying, well, now at these levels, I'd have to think about buying it again. He never bought it at the highs. He's not going to buy it at the lows. This is the penultimate insider trading scam, and that is, we've got to talk up stocks that everybody has to get out of. We've got to sell them to the rubes and those that have kind of a pie in the sky attitude to some of these. Is there a chance that maybe they come out with something that could turn the company around? It certainly is. They already told us what they had. They told us they were going to be late shipping it. There was nothing out there that really made me think that there was going to be a huge herd of people stampeding in to get tiny little keyboards on their phone. I think Apple told us which way the world was moving, and it wasn't back to little buttons on the bottom, no matter how much people like them. There's always going to be a few of those people in the software circles. It's normally called the baby duck. Whatever anybody sees is the first thing that they use. And this really came along when people were trying to go up against PageMaker and Photoshop. A lot of people came out with products that were good or better earlier on in the late 80s, early 90s. And you couldn't get anybody to move off Photoshop. You couldn't get anybody to move off PageMaker. And they'd learned that, and that was it. They didn't care if it was better. They were used to it. And, that's in the software terms, hardware terms, it's called the baby duck syndrome. Whatever the baby duck sees first is its mother. And if it's good enough, people will not move. And you have to really be significantly better to get people to move off an entrenched product, and that continues on today. Anyway, there's absolutely nothing to suggest Research in Motion has some kind of killer product hiding in the weeds. There's nothing that you can really say beyond the fact that these guys are making money, mostly in third world countries that have the networks we had in 2000. That is a very low bit rate, low speed, low bandwidth connections in places like Africa, and mostly sub-Saharan Africa. You get to South Africa, it's all Apple and Android. But if you need a very, tweets, that kind of stuff, not a bad deal. But if you are talking about watching video, you're not going to get that from Research in Motion. So pretty much I would suspect that after what they said and the fact that they had to drag this out of them, it took a full 2 hours to find out what happened with the actual numbers for Research in Motion. They kept asking, they kept begging them, and of course when this thing opened up, the news had finally come out of what they were trying to hide, and that is just what really were sales alike on Research in Motion. And what? Other than that, Research in Motion, a wonderful company. I'll have to try to hold it all in from now on. Another one biting the proverbial big one out here, Accenture. This thing took off to the downside. It's making a little hammer candle down here, but you might have something. This would be a good one to watch as it try to recover, and maybe another short position here, especially if we get a few days much higher. But this thing plunged down, currently trading around the $72 area. But when you look at the just a huge volume, these what do you have? Back to February. Back to January. This thing went back almost to the gap up that all the stocks had around the end of December. And we've got, I'm probably going to find this thing probably bouncing a little, but making its way back to that $67 level over time. So we'll continue looking at this. Let's see. Okay, so just checking a few more things out here, and it's just that bounced down. There's a few other stocks moving like this, and about getting ready to go to a break anyway. I need a drink. A little parched. It's nice and sunny down here in Florida, and also very dry right now. But anyway, we'll be back in a minute. You can give me a call at 877-927-6648. That's 877-927-6648. Look forward to your call on what'll be kind of a quiet day out here. But we'll wait for that. Anyway, be back in a minute.
The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And in this segment, wanted to just talk a little bit about the art of timing the trade charts. Of course, we did a webinar last night. Just wanted to remind you that this is the last weekend for getting the introductory pricing. It's going to go up to $79 a month or $795 a year. You basically have a 50% discount by acting now, and of course always a 30-day money-back guarantee on the product. So make sure to go to the front page of TFNN and check it out if you want to find out more. We've got lots of videos that I've done, and of course we've got 2 webinars. If you go to your members page, you'll be able to get the one from last night and take a look at it. I think everybody had a good time. Had a one of the biggest crowds ever at TFNN for one of these. So a very wonderful evening with Tom O'Brien and I as we went through the paces on it. Of course, what else do we have going on in this market? I wanted to see some of the stocks that were moving out here. Give me just a second here. Of course, Best Buy, or excuse me, RIM, whatever they're calling themselves today, off 27%. Most of the other ones are, not more than 1%, which is not a lot deal. MCP, probably the biggest one. After finding out that some of their legal problems were over, they jumped 50 cents today. Apollo, it's up about 59 cents. Of course, it's all these for-profit education companies getting hammered. Basically slowly going out. In fact, all those for-profit education companies are on my walking dead list. We had a kind of a nice pop out here in gold. I don't have, maybe I do have it out here. Okay, we had a nice pop by the close today in COMEX. We got gold up $12.80 to $12.24.40 an ounce. Of course, it had gotten down below once again as low as $11.86 today, finding a little bit of support so far today. September silver up 89 cents to $19.45. And September copper, though, fell 1 cent and closed right at $3 a pound. The one I'm paying attention to for the general market is copper. And as long as this thing really can't find a bottom or makes a good bottoming signal, I suspect we have lower prices to come. Some of the stocks that we do have popping, even some of these, highly short stocks, at least putting a little bit of fear of the God into everyone, is Newmont Mining. Actually popped fairly decently, up about 5%. We've got a few other ones. ABX, let's take a quick look at that. None of these yet making a real buy signal, other than maybe some people out here deciding to maybe take a little bit of money. Of course, everybody's short to the gills on these things. VIIB, also another one moving strongly out here today. Biogen IDEC. Nice little pop on this, although, it's just really up to where this thing gapped down on the 12th of this month already. You still have a high volume low down here at 194.66 that you'd like to see tested before this thing goes any further. SAP, of course, the German Microsoft, SAP. What is this thing down? It's looked pretty horrible. Of course, all of Europe has looked horrible. They're already in knee deep into a recession. Anybody knows the joke about back on your heads? That's, I think, the thing going on in Germany. Now, one thing that I would like to relate from all my times and trips to Europe, and that is you don't get spit accomplished in Europe in the summertime. Those guys come about May 15th. They're on vacation. Half of everybody's on vacation, and they don't come back till September, and they're mostly drunk anyway. At least that was my experience. Maybe they're not drunk anymore, but trying to get engineers, show people, anything else, anybody going and doing anything seemed like absolute insanity for the 10 years that I was flying over to Surrey, England, or going to some of our offices. As you got more into eastern Germany and into Russia, less so. But it just seemed like getting anything done was almost impossible there. And I don't suspect we're going to see a lot for them or a lot of effort from them to get them and dig themselves out of recession until we come back in September. But just my impression of the culture of Europe over there. We're on vacation. It's summer. Be back in a minute.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
As we come back, we're flat, up 1 point, down 1 point. Volume still light, 2.25 billion shares on the consolidated New York Stock Exchange tape. If you listen to TFNN long enough, you're probably going to hear some different numbers for market volume. And one of the things to know is that consolidated tape is all the ECNs, every share that could be traded on the floor, whether or not it was traded on an ECN is added up. Most of the numbers you get here from Tom are going to be just those traded through the New York Stock Exchange itself. That is about a fourth or a third, depending on what day it is. The sample size is large enough, so it doesn't really matter which number you use, as long as you know who you're listening to and what number they're giving you. It's kind of nice to look at the S&P or the SPYs because you always know the ETF numbers are the total. And not just partial numbers out there, but always interesting to know what the consolidated tape is, and it's just another number. But if you have 1,500 people, ask 1,500 people in the United States who should be president, you're going to be close, plus or minus 3 or 4%, something like that. and even more so when you've got a billion shares compared to maybe 5 billion shares. You get 25% sample. You're going to be accurate within 1.5%, probably, about 1.5%. So not a big deal out there. Of course, GLD up $2.47. We may have seen a little bit of push to get these guys out that are kind of hanging like a loose tooth that needs to be pulled from a 6-year-old, and they just don't want to do it. But it looks to me like there's still just one more good tug would do it and wash out these folks. And maybe going into the weekend here, there's a little bit of appetite to start buying gold. Part of it is some of the big men of Wall Street were out saying to buy actual miners. Because, of course, they've been hammered so well or so much. And maybe just a little bit of that out there, having a big guy tell you to buy stuff. Maybe it's enough to move the market on what should be a rather quiet day out here. But, of course, got right back up to where we opened. It really looks to me like they're going to try to hang this thing out a few days sideways. We've got the other stocks showing fairly amount of weakness. Palo Alto Networks was the poster child for some of these stocks going public over the last 6 months, and not a bad company, but certainly probably came out a little bit rich. Of course, when you look at this, we also are running into the time frame where you actually start seeing when it went public and when the shares became available after lockup. Of course, that's usually 6 months, but you have to look at the prospectus for each company that goes lockup. Facebook's was tiered over a number of times, but there's a lot of these stocks that became high flyers over the last 6 months that are getting awful close to lockup, and seeing a lot of volatility in them. When that ends, probably a good time to start thinking about whether or not we can start maybe pulling shorts on some of these that are going to have huge open interest come back. Anyway, what else do we have going on in the market? Looking at a couple. I added a short yesterday, and it's off 0.75% today, so probably not a bad entry, but we'll have to see what happens over the next few days. We'll just look at a few more. There was some discussion about Apple, and this is very interesting. In fact, I heard on the way over, turn the radio on for just a minute, and actually flipping through the dial, and heard a talk show host, national talk show host, saying how Apple really was the #1 smartphone company in the United States because they make the most profit. And that just because Samsung has 3/4 of the market, no big deal. And everybody always argues whether you want to have a market share or you want to have profit. Profit's great, market share is great. Eventually, though, as your market share grows, even though you have high gross profits, eventually you leave the door open for someone to come in, and the wrong dog will come in. And for that, Apple left the door open, and Samsung came rolling in with the help of Google. Of course, Apple did itself no favors by continually sticking its thumb in the eye of everybody in technology. But if you're a revolutionary like Steve Jobs was, that's just part of your personality, is sticking it to the man. And I guess the man is anybody that isn't your company. Of course, it's not a bad-looking chart out here. The problem comes to be is how many times can you bang away at this previous low. You had 21 million shares at 385.10. You've pretty much, I think we've broken probably broke the 90 low out here, which means that I'm not going to consider Apple a Gartley pattern anymore. Once you normally get past a 90% retracement of the X to A leg, your odds go to about 80-85% that you're going to come out and test that high volume low. And that 385.10 certainly is hanging out there, and I suspect we're going to get that tested over the next few days. So just one thought out there about actually doing that and what it is. But it's getting a little bounce out of here today, but not a lot of volume. It's still hanging under this $400 level, and you want to see light volume like you have here, but at the same time, it's gotten low enough that the odds favor once you get past a 90% retracement in a Gartley pattern, a Gartley 222, that you're probably going to see at least a test of the previous low. So 385 needs to get tested. Again, probably not a Gartley pattern at that point, but we're probably going to be looking at light volume. But 11 million shares today? You need to come in with less than 21 still, kind of in that same bar out here that had all the volume and at some support levels, but nothing really saying get on board for the Apple train. We promise you no worms when you take a bite. Other one is just taking a look at a few other things out here. Well, let me look at the Nasdaq, see if we have any. Wanted to see how some of these stocks have been trading. Not a huge difference. Wanted to see how some of these stocks that had pulled back, like Oracle, if I could type correctly, he said, ORCL. Of course, this had a nice little Gartley pattern. We'll show you the one we've been looking at. But normally, everybody can't wait to rush back in and buy these companies. Of course, we're going to be talking a little bit about on the news in the 4 o'clock hour tonight when we talk about the Tech Insider. But a lot of news out this week in Oracle, really not catching a bid so far. And again, trying to trade up today on a lighter volume. But, of course, a lot of bromances going on there. Oracle CEO giving the big hug to the Salesforce company. The Salesforce guy was previously an employee and disciple of Larry Ellison's at Oracle. And they're kind of giving each other a nice little bear hug, maybe a little too long. I felt a little uncomfortable, but anyway, you got those little hugs, frenemies, whatever you want to call them. But doesn't seem to have made a lot of difference in Oracle. Let's take a look at CRM real quick, which was the other one. This another one of these companies that are getting hammered. I think we had a few callers call in about this and whether or not this thing would do anything. And I said because this thing came down on heavy volume, the most likely cause, because it was at support, was that it was going to go sideways for a while. And you're starting to get into this thing where you're going to wait for this thing to have one more pullback on very light volume. And maybe that's the point you want to buy these things at. Let me reset that just a little bit. Of course, this thing came down on huge volume. We talked about this with the caller before. Let's see. Just want to make sure. Maybe he called back. 877-927-6648. 877-927-6648. But you can call in. But anyway, Salesforce, the idea was whether this thing would run, and I thought more likely it would go sideways. It has. You've got 30 days into this thing. With the amount of destruction that's happened in this 25% move, normally I'll say this thing took a 3-4 weeks to go down. Normally double that before you start looking at these things when they do start consolidating at lower levels. That means probably 60 days of it going sideways before this thing flattens out. Of course, the problem is Amazon. Amazon has been cutting the costs of lots of its cloud-based its servers, and of course no one cares that Amazon doesn't make a dime, but if you're CRM, that's you are going to be judged on how much money you make, and it's a lot tougher. Amazon kind of still hanging in at these higher levels, but certainly a lighter volume over the last 3 or 4 days out here. But you'd still think this thing, I mean, it's given a fairly nice sell signal, but you'd really love that 284.72 of January 25th this year to get tagged, you're going to need more than 4.9 million shares, and I think that still happens before we can pull the trigger on Amazon. And I was going to see if I can't do something here real quick. I wanted to look at home builders, and we're going to get into that real quick. Home builders, and take a quick look, and then we'll get a look at financials and see how they're doing today. You know, we got a nice little pullback in almost all these. Pulte's the worst of the home builders today. PHM. And look at this thing. It's not really that bad. Just coming back up. Had a nice little gap up. You got a little bit of volume, but you did get a doji. Really looks like you've got the high volume low. You know, it hasn't tested the previous low out here, but it got very close. The April 18th low, 9.8 million shares at 1746. Stopped 20 cents higher, but volume was 12 million shares on the 26th. Gives you every indication that you're going to see at least that 1746 retested, and maybe you'll get lighter volume, but you still, you know, you really want to see the volume really dry up in these things to think that any of these are out here. Toll Brothers, when we look at that, TOL, you know, going to be making a little ABC down here. You know, yeah, you could. If you're talking about the little one here, we can go for the little one. I think it's that one right there. Let's zoom in here. Oop. I think it's that one right there. B. And yesterday would be our nice little C point here. And that's pretty much a 7.6 retracement. That's pretty big. Of course, it's pretty small. Just a few days sample size out here, but it wouldn't give you much of a one-to-one. Take you back down to 29 cents, but that's probably a good idea. This thing is probably going to go back and test in the high 29s, I would suspect. And at that point, if you see the volume real 2, 3 o'clock in the afternoon, you might be able to get back into some of these housing stocks, but I think maybe you might have a little problems. Other stocks in that sector that are not doing well today, lumber liquidators. Let's go ahead and turn that off so we can say, you know, this one down on light volume, so maybe we go sideways a little bit on this. But you know, you came down with strong volume. You've got that gap out here, 1.7 million shares. If we go back and look, you know, not a bad setup out here. In fact, this did come out. This did come up on heavy volume on 3 million shares on the 24th. Came down here, tested it on 1.7. You know, this is actually one of the better looking charts out here, other than the fact that as you get back up where we're at right now in the $81 range, you're going to have issues with this high volume down day of the 21st of June. So, housing sucketh. We'll say it that way. D.H. Horton, it's not off badly. What else? Lumber liquidators. Pulte, looked at that. Ryland's not bad. SCSS. USG, we'll take a look at that. It's another, of course, the drywall manufacturer. See how, making a little, making just a little kind of dragonfly out here. I'm not going to even call it a dragonfly. Tail isn't long enough, but just a little light volume move out here. Another one that looks like it could come back out here and test these lows. So probably going to look and see at these housing stocks, if this continues into Monday, probably going to see them test their lows next week, it looks like. You had your short-term bounce. You know, we're up 1% in interest rates from the bottom, and I think that's going to cool things over the summer. Be back in just a minute.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter,
Patterns, Profits, and Peace of Mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, folks. I'm Steve Rhodes with TFNN.com, and the trend is your friend until it changes. A free special report is now available on the homepage of TFNN.com, and if you have money in the markets, this free report is a must. If your strategy is buy and hold, this report is a must. If you're a day trader, a swing trader, a Forex or options trader, or just getting into the markets, this report is a must. And it's the second best gift you'll ever receive. Look, if you buy a stock and the general market is trending in the other direction, you've reduced your odds of buying at the right time by 70%. Instead, let me teach you how to get that 70% advantage plus. The plus is a free trial to my daily newsletter service, Mastering Probability. There's no upfront deposit, no charge to your credit card, and I compress decades of education into each daily newsletter. This is a limited time offer, so act now, and I'll teach you how to take the trend and turn it into your best friend. All the details are on the homepage of TFNN.com. Act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And as we get back here, we're going to look at a few of the bankers. Just first, someone said STEM was rolling, and I'd been watching this thing out here. I've been making some pretty light volume lows. Change in principal officers. Looks like they canned some people, got some new people out here. Just kind of interestingly enough, the reason I went ahead and wanted to look at this real quick is I was writing about, in the Tech Insider today, about genetics, especially after the court ruling a week ago and how that's going to affect trading. I wanted to look back in it, and when we were discussing it on Tom's show, I knew that I didn't know quite enough about it. to explain it simply, and I made a few page executive summary on maybe how we want to look and what is going to be the profitable side of genetics, at least in the investment realm over the next few years. And I think you probably understand genetics fairly simply, and maybe some place that's really going to do well in technology as a byproduct of it. And quite compelling evidence in there. But Tech Insider today, we'll be doing the Tech Insider hour at the 4 o'clock hour. But yeah, STEM, nice little pop out here on a change in, what was it, CEO? I'll have to look at that later. Nice little pop. Anyway, what else do we have going on in this market? That is the broker-dealers. And that is Morgan Stanley down a little bit. These things, could they have already started their ABC downs? You might even look at this thing as starting some really small, minor ABC downs. Let's look at this thing real shortly. Maybe we can get even a little bit more out here. Yeah, that's what kind of was looking at here. I mean, these things are, it's a choppy market, but you've got some kind of weird moves down in this market, but that would not be too bad. What is 29 to 23? So what 280? So that would take you back down to what about? Well, let's just do it. Expansions A, B, and C. Nah, crap. Oh, I got it. Yeah, it would take you down to 2261, and there's a nice fat gap there. So maybe some of these smaller ABC downs are setting up. Morgan Stanley. So your A point would be June 19th, 2669, 26 million shares. You had 22 million shares on June 24th. You pop up 19 million shares on June 26th, 2539. And we haven't come back and tested that low, but boy, if we go out here and break, not going to need that much, 22 million shares out here. And that pretty much matches up with the May 24th low, almost at that same price point, actually just a few pennies higher that you got into. So maybe this thing's just building a little bit more steam, but certainly looks like you've got a nice fat gap out here at 2261, and that would also be the 1-to-1 correlation. So we could see a continued weakness in some of these. Let's take another look at one. Morgan Stanley, of course, the worst of these today. J.P. Morgan, let's look at Citi. See, like that. We're just about out of time. Not much out here. Anyway, going to see you Monday, same bat channel, same bat time. Catch me in the 4 o'clock hour where we normally talk technology on the radio and not on the podcast. Of course, you can always catch this show on Tiger TV, channel 14. As I say, same bat channel, same bat time. See you Monday.